Welcome, new viewers. Thank you to our returning subscribers. We aim to provide you with invaluable content that meets your needs. Now let us continue preparing you to pass the Securities Industry Essentials (SIE) exam. The SIE, Securities Industry Essential exam, is an excellent way to begin your career in the financial investment sector. It encompasses the fundamentals of the industry and prepares you for more advanced examinations. We provide a unique series of resources to help you excel in the SIE exam. Don't miss this opportunity to advance in the financial market. Subscribe now and join us on this exciting journey, and while you're at it, please like the video too. Thank you. Let's continue. Clearing and settlement, an overview. What occurs after a trade takes place? At this stage, the buyer and seller must reach an agreement on the terms of the transaction, clear the trade. Ultimately, the buyer is expected to pay for the security, while the seller is expected to deliver it. This simultaneous payment and delivery process between the two parties is known as settlement. The modern securities clearing process is quite complex, involving many participants that are interconnected through various computer and communication systems. In a well-developed capital market, such as the one in the United States, most trades are processed electronically, with very few paper securities transactions taking place. DTCC. The Depository Trust and Clearing Corporation is a securities depository and a national clearinghouse for the settlement of transactions in equities, corporate, municipal, and United States government bonds, mortgage-backed securities, money market instruments, and over-the-counter derivatives. The DTCC also has significantly expanded its ability to process transactions in mutual funds and insurance products. The DTCC's function is to automate and centralize the clearing and settlement of trades among its members. Most major financial institutions in the United States are members of the DTCC system. The primary goal of the system is to eliminate physical securities in order to increase the speed and reduce the cost of clearing and settling trades. The National Securities Clearing Corporation (NSCC) and the Fixed Income Clearing Corporation (FICC) are both subsidiaries of the DTCC. The NSCC clears equity trades for both United States and foreign issuers, while the FICC clears bond trades. The DTCC is a non-profit, industry-owned corporation. Its owners include broker-dealers, investment banks, commercial banks, and mutual fund companies. The DTCC and its subsidiaries are regulated by the SEC, and the depository is also a member of the United States Federal Reserve System. Processing the trade clearing and introducing firms. The clearing process will often involve two clearing firms and introducing firms. Due to the cost and complexity of creating and maintaining a fully functional trade processing area, many smaller broker-dealers, introducing firms, choose to hand off trade processing and clearing functions to larger broker-dealers, clearing or carrying firms. The costs of clearing include a significant investment in hardware, software, and personnel. Let's take a look at the responsibilities of these two firms, clearing firms. One step below the DTCC on the trade processing hierarchy are the clearing firms, also referred to as full-service firms. These perform order execution, clearing, and settlement functions. Clearing firms interface with the DTCC directly for both their own transactions as well as those of any other broker-dealers that choose to clear through them. Introducing firms fully disclosed versus omnibus accounts. Neither process customer transactions nor do they operate their own clearing operations. Instead, they contract with clearing firms to perform these services. While customers of an introducing firm consider that firm to be their broker-dealer, customer funds and securities are actually physically held at the clearing firm, from which they generally also receive statements and confirmations. The clearing process involves both introducing and clearing firms. A clearing broker may provide introducing firms with back-office and related record-keeping functions on either a fully disclosed or omnibus basis. The differences between these two arrangements involve the level of detail the clearing firm will have regarding the customer, as well as which entity will be responsible for providing trade details to the customer. Fully disclosed accounts. Many introducing firms operate through a clearing firm on a fully disclosed basis. This means that information about each of the individual customers of the introducing firm will be transmitted to the clearing firm, and the client's assets are held at the clearing firm. The clearing firm establishes separate accounts for each client and is responsible for all of the paperwork associated with the accounts, such as the delivery of confirmations and statements. The paperwork will be identified as coming from the clearing firm, but it will contain additional identifying information so that the client can determine to which introducing firm the paperwork is related. For example, a client statement may list ABC Clearing at the top of the document, but will also contain the name and contact information for XYZ Brokers, the introducing firm. Introducing firms' omnibus accounts. Not all of the relationships between introducing and clearing firms are fully disclosed. For example, ABC Bond Brokers Inc. is a fixed-income broker-dealer that has a complete back-office operation for clearing its bond trades and holding customer positions. However, the firm will occasionally accept an order from a customer for common stock. Since the firm doesn't want to set up clearing operations to handle these infrequent accommodation transactions, it has arranged for DF Clearing to execute and clear its customers' stock trades. ABC doesn't provide DF Clearing with details regarding the individual clients. Instead, ABC uses a single omnibus account that's specifically designated by the clearing firm for customers of ABC Bond Brokers. In this type of arrangement, since the clearing firm doesn't have information on each individual customer, the record-keeping responsibilities belong primarily to the ABC Bond Brokers, the introducing firm. Other customers of clearing firms. Although clearing firms have traditionally serviced smaller broker-dealers, these firms are not their only customers. Clearing firms also do extensive business with investment companies, such as mutual funds, investment advisors, and hedge funds. Hedge funds. A hedge fund is a private, actively managed investment fund that uses sophisticated strategies in an attempt to generate returns that are higher than traditional stock or bond investments. These strategies could include concentrated speculative investments on a given company or industry, arbitrage, which is a relational trade between two investments, short selling, which involves speculating on the downward movement of a company's stock, currency or commodities trades, and margin, which is the use of leverage. Prime brokerage accounts. One service that clearing firms typically offer is prime brokerage. The prime brokerage relationship consists of a bundled package of services that's offered to hedge funds, institutions, and high-net-worth individual clients. The clearing firm acts as a centralized location for holding all of the positions that were created by the various executing firms through which the client trades. Prior to prime brokerage, clients were required to open a separate account at each executing broker-dealer. After trades were executed, each broker-dealer would then provide confirmations and statements to the client. The challenge for the client was combining all of the information that it received from its various accounts to understand its overall position. In a prime brokerage arrangement, the client chooses one firm as its prime broker to consolidate the bookkeeping process. Although the client may still use several broker-dealers for execution purposes, and as a source of research, allocations on IPOs and so on, all of the trades are ultimately handled through its account at its prime broker. Therefore, the client receives one set of reports, rather than several. Clearing options, contracts. Options are derivative trading products that track the value of an individual stock, an index, or foreign currency. Options contracts can be purchased either on one of the options exchanges or in the over-the-counter market. Options contracts that are purchased on an exchange are referred to as listed options. Currently, listed options trade on the following exchanges: the Chicago Board Options Exchange, the Boston Options Exchange, the NYSE Arca, the NASDAQ PHLX, formerly the Philadelphia Stock Exchange, and the International Securities Exchange. A key feature of exchange-traded options is standardization, which means that the terms of the contracts are set and uniform. The DTCC doesn't clear options trades. Instead, this is the job of the Options Clearing Corporation. The Options Clearing Corporation, or OCC. Listed options are issued and guaranteed by the OCC much in the same way that the DTCC guarantees locked-in trades for its members. The OCC is regulated by the Securities and Exchange Commission and is owned proportionately by the exchanges where listed options trade. The OCC acts as the third party in all option transactions. Broker-dealers deal directly with the OCC rather than with each other when settling trades. When customers buy or sell option contracts, their broker-dealers must settle the transactions with the OCC within 1 business day. Give us your quick feedback before we proceed. How are we doing? Are you gaining value from this information? Let us know by liking the video and subscribing to our channel. Thanks. Now let's continue. Other entities that keep markets running smoothly. In addition to DTCC, there are other types of financial institutions that help keep the equity, bond, and options markets operating smoothly. These intermediaries include custodians, transfer agents, registrars, and trustees. Each of these institutions are described in this final section. Issuers typically use banks or other financial institutions to hold customers' securities for safekeeping. Although a custodian may hold assets in physical form, it's much more common for securities to be held in book entry or electronic form. Issuers that have publicly traded securities outstanding typically use banks or trust companies to keep track of the owners of their stocks and bonds. Typically, the firms that provide record-keeping services act as both registrar and transfer agent. A registrar's function is to maintain the ownership register of the issuer for each issue of its securities. The registrar records the name, address, and tax identification or social security number of each individual owner. These securities may be held in certificate form or by the investor's brokerage firm in street name, which means in the name of the broker-dealer. The transfer agent is responsible for the issuance and cancellation of certificates to reflect changes in ownership, maintaining a list of current shareholders who are eligible to receive additional shares after a stock split, acting as the company's paying agent for interest payments on bonds and for cash or stock dividends on equities, acting as proxy agent by sending voting materials, and mailing agent by mailing the company's financial reports to shareholders. They also handle lost, destroyed, or stolen certificates. For some types of investments, such as select bonds, loans, or trusts, a trustee is assigned to hold security interests that are created on trust for the benefit of various creditors, like banks or bondholders. Some bond trustees also ensure that issuers abide by promises or covenants that are found in a formalized agreement referred to as a trust indenture. Additionally, these trustees may represent investors in the event of default or bankruptcy. As we end this segment, we invite you to show your support by liking this video and subscribing to our channel. It is a simple click for you, but a huge support for us, and it is completely free. To be among the first to be notified of the continuation to ace the SIE exam, please turn on your notification. Thanks.